Hey, Prana, can you go over to like YouTube and just see?
Yeah, it says live now.
What'd you say? Nice. All right, Phil, let's do it.
All right, ready to rock. Yeah.
Good morning, everybody. Welcome back to the Opportunistic Trader. It is just before 10 a.m. on December 6th, and we're now joined by... Oh, that's an issue. We're now joined by Phil Flynn of the Price Futures Group and Fox Business Contributor. We got a lot to talk about today, Phil. We have volatile markets across every asset class. So what are you hearing and what are you seeing right now?
Wow, right? Woo, whoa, man, what a morning. I'll tell you, I mean, the volatility has been absolutely incredible. And it really has been going on for the last couple of days. We had that real major stock market sell-off on Tuesday. Then we had the day of mourning for President H.W. Bush. And the markets were closed. And then, of course, we reopened and the S&P opened limit down. And I think, when it reopened, the selling was way overdone because I think it was, the lack of activity, computer algorithms, and it was out of whack with the rest of the global market. But today, we're seeing some follow through on the downside, mainly because of growing concerns about the trade war truce after this arrest of this daughter, and who's at the same time the CEO of this Huawei technology company that allegedly has been doing business with Iran, has been doing business with North Korea, in violation of international sanctions and U.S. sanctions, and also because of the concerns, of course, that the economy is slowing down. So you put all this stuff together, and it's really weighing on the market sentiment today.
Yeah, it's been a really remarkable price action over the past 7 or 8 trading days in the equity markets. We were trading down at 26.25 about 8 trading days ago. Then we rallied up to 28.14. The end of last week, we had 3 things. We had Powell come out and say, hey, we're not going to hike as much. So the market kind of breathed a short-term sigh of relief. We rallied about 50 points on that. And then, the trade... big G20 talks went okay, based off of everybody left saying, things are okay. But, now we're starting to, sell off, it seems like, on fear that things aren't as okay. And, we're back towards those lows. So we've seen about 8% rally and then fall.
But somebody just didn't let the ISM, the Institute for Supply Management, they just came out with their manufacturing number and it was higher than expected at 60%. So it is kind of a disconnect. You look at the data, and it's not showing the type of slowdown that the market's fearing. And so it really seems to be some of these outside concerns about trade wars and Brexit and all that kind of stuff, and not really about the hard numbers. Take a look at oil, for example. Oil prices have been crashing, and Donald Trump is, tweeting it down, and he's very happy about it. But at the same time, that's kind of cementing fears that the economy is slowing down more than it is. And, so that's creating all this crazy volatility. And, when you get moves like this, Michael, I wouldn't be surprised to see him, turn around really quick at any minute. You're probably just one headline away, from a big rebound. But, the volatility right now is just out of control.
Yeah, and to follow up on 2 points you made, ISM just did release. They were expecting 59. It came in at 60.7. But on the negative side, October final durable goods came in at negative 4.3%. They're expecting negative 2.4. So we're definitely getting a bit of mixed data. But ISM still very strong. Above 60 is very strong. So that's definitely something there. Yields have been a very big move. We were talking earlier a few months ago, it was just 8 weeks ago, people were talking about concern about yields on the upside. Now, we've got the 30-year, we've got the 10-year at 289. Yields have come back down, and it seems like that's on the thought of where global growth might be and fear of what trade is going to be with China and globally.
Yeah, I mean, before we were scared that the rates were going up too high and that was going to slow growth. Now we're afraid that the rates are going too low because growth is already slowing. And it does seem to be the type of trade that happens, when you're going through an adjustment in the economy. And we are definitely moving from an accommodative cycle to a tightening cycle. And the market is still trying to adjust to all of this volatility. Now, there was a lot of talk, last week, and part of this with the inverted yield curve between the 2 and the 10 years, it really caused a lot of concerns that, hey, that's a sure sign that we're going to go into a recession. But people have to realize that, first of all, even if that is a correct indicator that we're going into a recession, usually the inverted yield curve, takes about 2 years for the recession to actually hit. So you have 2 years to cover for that and take advantage of that. But what we're hearing from a lot of the people that watch the yield curve, even people in the Federal Reserve, they don't think that the 2 and the 10 year is really the best predictor of a slowdown in growth. What we're hearing is that they were really watching the 10 year in the 3-month note. That's where the activity is. There's a concern that with all the quantitative easing, the buybacks by the Federal Reserve, that the 2 and 10 year is going to give you some data that isn't quite as predictive as it should be. So a lot of them are looking even at the short end of the curve to the 3-month bill versus the 10 year. And that has not inverted. Now it's getting pretty close, to being flat, but that's the number that most people in the think tanks are looking at. And, and so we could be getting a false signal on that, but you can't take away from the mood in the market. I mean, you've got the S&Ps right now under a lot of pressure. You've got the stocks under a lot of pressure. And, you have to kind of listen to what the market's saying, even if you believe, as I do. I think a lot of this is based on fear. And you look at where the Dow is today. As bad as the market looks today, we were here, before the market rallied, a month ago. So, it's not like we're really hitting the market hard. I mean, we're just getting back to where we started the year, and that's kind of where we've been bouncing off of for most of the year.
Yeah. So let's shift gears here to energy markets, which have been equally as volatile. It's been a crazy past 8 weeks in energy, to say the least. There's so many stories. We have the DOE numbers coming out at 11 o'clock. But tell me what's going on. Why is oil down 2.5% today? We're traded down to 50.23. We bounced 2.5% from those levels. So what's going on, and what are we expecting later?
Couple of things right now. First of all, the stock market being weak, the concerns about that arrest of that CEO of the Chinese technology company raised concerns we'd be back in a trade war. But really what seemed to push prices down initially was the comments by the Saudi energy minister that, hey, maybe we won't need an OPEC production cut right away. Or if we do, we're going to basically wait till we hear from Russia and see if they're going to be on board for a cut. So what the market, OPEC is in Vienna today. The official announcement on a production cut is tomorrow. But, we're getting all of the pre-meeting jitters. The word on the street was that we were looking to get a 1.3 million barrel deal done at this meeting of a production cut. 1 million barrels of that was supposed to be Saudi Arabia. Of that 1 million barrels and the rest of OPEC, they were going to do that million barrels. The bulk of that production cut was going to be done by the Saudis, right? They were going to do at least, 5% of that cut. And the rest of the members were going to make up the difference. So they were going to take the bulk of the cut and split up the difference with everybody else. The Saudis, though, in return for that, wants Russia to chip in, and cut by at least 300,000 barrels a day. The Russia has been countering with 1.75, and now there's a dispute to whether Russia wants to cut at all. And so you've got this drama going into the cartel. So there seemed to be a suggestion by Alpha Lee this morning that, hey, you know what, we can agree to a cut. Maybe we'll only need 1 million barrels, and then we'll wait to see what everybody else does, mainly Russia. So the market took that as a possibility that maybe this deal isn't going to get done, or if it's going to be contingent on the Russians kicking in enough barrels. And so that really caused some concern in the market. Having said that, people on the ground and sources we have on the ground seem to suggest that the rhetoric that we're hearing out of Alpha Lee might not be, based in reality. It might be, number one, either a negotiating ploy, or number two, it might be just noise ahead of the official announcement to test the market. And there's one case out there that says that they're really going to shock and awe the market and do a 1.4 cut. So the question is, do you believe the headlines that you're reading, or do you believe the chatter and the cartel around the cartel? Well, we're probably going to find out in the next 24 hours, which one is going to be true. I will tell you this: if indeed OPEC can't come to a decision, it will be viewed as very bearish, and that would probably take out that $50 a barrel support and open up the move, to a move to the low 40s potentially.
But what's the dynamic? I'm sorry, just actually, no, continue. I'm sorry to interrupt.
No. Go right ahead.
I was just going to say, so what's the dynamic in oil these days? Like the major players, like for instance, we just saw at the G20 meeting, Russia and Saudi Arabia were high-fiving each other. I guess, where's the friction, and where is the, what does all that mean? And like, for instance, these cuts that we might be seeing or might not be seeing, who are the major players still right now in OPEC?
Well, basically, the major player in OPEC is Russia and Saudi Arabia, and Russia isn't even a member of OPEC. And that bromance between Crown Prince bin Salman and Vladimir Putin is irritating a lot of the other members of the OPEC cartel. It's kind of like, why are we even showing up here? Because all the major production decisions are going to be made by Saudi Arabia and Russia. So why are we part of this cartel when we really have no say about what the final outcome is going to be? There was a lot of concern when Qatar decided to announce that they were going to leave the cartel at the end of the year, starting in January, and that they were going to go their merry way. Some people viewed that as, basically the beginning of the end of the OPEC cartel, the first Middle Eastern producer to leave. They've been a member since 1961, and oh my gosh, this means that the rest of the OPEC members are going to leave. It did raise speculation that there are 2 other members that would like to leave. Iraq, for example, is getting increasingly frustrated because their ability to increase production is going on. They have the potential at some point to rival the United States, Russia, and Saudi Arabia is the world's biggest producer. So they want to continue to grow their output, and they do have that potential, but they feel like they're being hampered somewhat by being restricted by what the cartel says they can do. I don't think we're very close to them leaving the cartel, but that could be an area to keep an eye on in the coming years. Iran, of course, they consistently are upset with the cartel because obviously Saudi Arabia is their nemesis. And usually what's good for Saudi Arabia when it comes to global oil production is not good for Iran. And, here's Iran, a member of the cartel, but yet you have Saudi Arabia making, oil production decisions based on what Donald Trump tweets about, and Iran's like, wait a second, is Donald Trump part of this cartel? Should we be listening to him when we're making these decisions on oil? And hey, just remember, the only reason why, you're listening to him and prices are going up is because I'm going to be losing my ability to sell oil in the global market. So you definitely have those tensions in the cartel. But the main thing, at least for this meeting, is just the relationship between Saudi Arabia and Russia. That's the only one that matters over the next 24 hours, because right now, whatever they do decide on production cut is probably going to go. And if the Russians decide not to go along, this could be like the November 13 Thanksgiving meeting when we saw a crash in prices, from 110 down to 40 in a very short period of time. It could be viewed as that. Now, I caution people. I don't think that's going to happen. I think the Russians have learned a lesson from the last price crash. I think everybody has, so I don't think that's going to happen. But that is a concern of the market, and that's why we're seeing the extreme volatility.
So today we have the DOE in 45 minutes. What are you going to be looking at, and what do you think is important? Some people were talking about the price action after being telling for, what really is driving the, oil market, because, we're probably more looking at the OPEC stuff. But what's in the data, and what are you going to be looking at closely over the next 24 hours?
Anything that doesn't look like the data from the American Petroleum Institute. I talked to a lot of people over the last few days, and a lot of people in the industry that are just sick and tired of the OPEC cartel. Sick and tired, of the American Petroleum Institute and bad numbers and things. So they're looking at the data. They're getting increasingly frustrated with the fact that the American Petroleum Institute says one thing, the EIA says another thing, and we had this ridiculous build across the board that nobody was looking for. Almost 15 million barrel increase in petroleum supplies, and everybody's scratching their head and saying this isn't possible. The math doesn't add up. So there's a lot of frustration. We're getting a report from Genscape where we're supposedly seeing another increase in another potential increase in Cushing supplies, which means that we might get a surprise build. But I think what we want to see is a drawdown in crude supplies in the overall market. And if that happens, I think that would be a very positive outlook for the prices, and we should hold $50 a barrel if it holds there. So,
okay. Well, we'll definitely keep a lookout there, and it's going to be a really interesting energy day. We got the data coming out in about 45 minutes, so we'll keep a close eye on that and the market reaction after. But Phil Flynn, Price Futures Group, a Fox Business contributor, we really appreciate you taking the time.
You got it. Thank you, buddy.
All right. Talk to you later.
Bye-bye now. Thank you, sir.